Nimesh. Well, with that, let's move on to another corporate conversation. And we're putting the spotlight on the IT space. And the company on our radar is Happiest Minds. Now, you would have seen that over the past couple of weeks, several brokers, including CLSA and Motilal Oswal, they have upgraded the IT sector. And they're expecting a better performance going ahead. So is there something really shifting on the whole AI front? Is the second half going to be stronger for Indian IT companies? Well, let's put those questions to Venkatraman and Narayanan, MD at Happiest Minds. Venkatraman, thank you very much for joining in. And I really want to start right there. We're all trying to understand the implications of this great AI moment for India. And I'll tell you what has shifted. A lot of these brokers whom we spoke with, their argument is that the AI build-out stage is probably peaking now. You know, the billions and billions of dollars of infrastructure that the likes of NVIDIA and the others are putting up. But as we move deeper into the AI adoption stage, that is when Indian service providers will make a comeback. And the use of AI in the delivery of services, that's where the numbers and the growth and the deals will start coming back on stream. Now, you tell us, you're a participant, so I'm sure you'll have, to that extent, you'll have a slightly biased view. We all want to believe this. But can this really happen? What are we in for as we're looking at AI and Indian IT in 2026?
I think you got it absolutely right. Just like any capex cycle, you have a capex build out, and then the revenue cycle starts after that. If you look at the AI boom or what's been happening across the world, it's been billions and billions of dollars being poured into the infrastructure part. But for anything in the tech or technology space to really take off, you need to create ecosystem. You need to take up. There has to be adoption, and both of these happen only through what you call a social media effect, or what you talk about adoption by people who want to use it for furthering their business. So until now, what's happened? The infrastructure build out is happening. You have got the large tech companies pouring billions into it. Now, to make sense of this for the enterprises or for application service providers, you need the services to be built around it, and then you have service partners like us help that build out. And this has been how it has been, let's say, many years back when the ERP boom happened, where the software services, people coming out with big bang approach on the ERP, but you then need the consultants to do the re-engineering, remapping, and implementation. And that's where the consulting services companies and the tech services companies really came into to the fold.
But Venkatraman, if you could dive a little deeper, what makes you confident then that Indian IT service providers will be able to capitalize on this opportunity the most? I mean, there will be competition from the likes of Accenture and the other big, consultants as well. So, and till now, we don't have very definitive numbers for the industry as a whole, even for individual Indian companies, that, what will the AI part of the revenue be? So for the street, it's also a little hard to map this. If you could give us some more light.
Yeah, I think we've been one of the very few companies that have set out ourselves the goal of, setting out the numbers that we get from AI. We started out by making it a segment for ourselves.
Yeah.
So right now, 2.7% of our revenues comes from AI. The difficult thing out here is almost all the work that we do today is AI-led. How do we differentiate between what is core AI versus what is AI-led? But that's a challenge that we'll come up to later. But as of now, the way we are identifying core AI business is about 2.7% of our total revenues. And we are looking at that growing to about $7 to $8 million by the year, and grow to 5% very quickly. And we have also put out the points that we have got 22 use cases right now, replicable sales or replicable use cases, which help enterprises adopt and make the most out of the AI infrastructure that's being built out. So that's something that we have set out, and we have also said that the revenue potential for somebody like us is about $30 to $50 million from there. We have signed up 30 new customers, and almost all the customer signups, I would say 28 or 29 out of the new customer signups that we have been AI-led. So you're seeing how we are becoming, the approach of being an AI-first, AI-led company is helping us. And all of this on the services front. Let me say that as well, because we are not doing anything on the infra side or setting up infrastructure side. Yesterday, for example, we have launched our own agentic AI support AI platform called Elera. We have released a press release on that. Shows that we are getting ready to even tackle the L1, L2 part of services side from with agentic AI support. So this is where we are coming from. And the Indian IT services company, when we say we have done 22, I'm sure the other companies are also building out similar use cases, and they are also
this Venkat, this $30 million of an expected pipeline, AI pipeline. This is over how many quarters? By when?
No, we have not given. We have said over the next couple of years. That's what we have said, because you have 22 use cases. We have started seeing traction with our existing customers, and then you do an arithmetic of how you will sell this into existing and the new customers in the prospect database, and have come to a number that's how we have come up with this $30 to $50 million.
All right.
Just like the 30 signups will likely lead up to $50 million is what we have said. Because what's the kind of run rates that we have today? You have the run rate multiplier, and then that comes to about $30 to $50 million. You have to build it piece by piece.
All right. Hi, Mr. Narayan. Good to see you, Ben, sir. Give us a few more details. Sneak peek into quarter 3. How have deal wins been? How have logos been? And if you could give us a sense on furloughs for quarter 3, a broad sense.
We have not seen that high numbers in terms of furloughs as of now, or at least we have not got any indications of that. Because in our business, as we have said in the past, we do have furloughs with a couple of clients, but it's not it's not something that's uniform. Yes, Q3 for the industry typically is slightly on the weaker side, but we have been confident. We have said that we'll do our double-digit growth for the year. We have done 11.8% half year over half year in dollar terms, and about 2.3 QOQ and 6.7 half year over half year. So what we are saying is we'll see a similar kind of growth continuing in Q3. We will have some small impacts of furloughs, but then we missed out some growth in Q2 thanks to pushing out of the product, the Artha banking product revenues going into the next quarter. So that should help us set off. That's how the numbers stack up for us in Q3.
Okay, and you're rather confident, right? Next few years, double-digit revenue growth is there for the taking.
That's right. That's right.
And all
in fact, I had the opportunity of hearing the gentleman just before me from Nippon. He was talking about how the expectation is very muted from the tech sector. So I would say, compared to that, happy to say that we are still keeping our numbers high at about double-digit growth, and hopeful that we'll continue to perform on that basis while capitalizing a lot on the AI flood that's happening currently.
Any inorganic growth is what you're looking at?
Yeah, that's something that's consistently on our radar. When we have something more solid, absolutely, you'll be the first to hear from us.
Venkatraman, what will this AI expansion, what will it mean for margins? In the past, you've said that you'll probably be maintaining margins at the current level of around 20%. But what's going into those conversations on pricing, on upskilling the workforce? Tell us more.
Yeah, so on the margins front, I think it's only going to improve because the AI business of ours has started breaking even. I would think at least 6 months ahead of what I thought it would. I'm happy to say that from Q1, Q2, we have started breaking even, and it's starting to pull in margins into the company. So that's something that's been helpful. The new sales engine, which is where we were pouring money in or investing, that's also beginning to show results. Like I said, we have got 30 new logos, and it's that with potential of $50 million over the next couple of years. So investments that you make are beginning to show results and help margins. On the pricing side, yes, AI, the pricing for AI capabilities or AI services is slightly a notch higher than what we do in the digital side. So that's something that's helping us. But yes, continued investments into new technologies, retraining people, making sure that utilization continues to be high, because that's a challenge. You have to retrain, repurpose, get people adapting and adopting the new technology. So for that, we will be making investments. Also, compensation levels could be slightly higher. So that those things will continue. It's something that we have to do.
So to go back to the timeline that you shared, by the time that you are pulling in $50 million from AI, and you said that's over the next couple of years. I mean, what is the margin trajectory? Will it be slightly higher? But then you were saying that obviously you have to pay more to these.
It should be higher. It should be higher. Today we are at an operating margin of about 17.2%. And this is, I don't want to use the way slide down, but it has come down from the 18.5, 19% in the earlier part of, let's say, early part of last year, primarily because of the investments that we made. So these investments, when they start paying off, you have to start gravitating towards the 18% operating margin. So the thought is always to grow with margins, protecting margins and growing margins.
Final question, sir, before we let you go. What about your investors? They have been hanging in there. Those that got in the IPO will still be happy. But some who have bought in the last few years, they'll be wondering what's happening to the stock price. Management sounding optimistic. Yes, the sector has gone in a bit of a tizzy, but the stock price has come down dramatically. If you were to give them a message, what would it be?
Stay strong. Again, I'll go back to the conversation the gentleman was talking about before me from Nippon Mutual Fund. He was saying that, an IPO is only start of the journey. We are 5 years into the journey, and we have not, cost despair to our investors, at least from the performance, the company's fundamental performance. Pricing is something, which is relative, which has got quite a bit of sentiment attached to it. Many of them beyond our control sometimes, and that's what seems to have happened. But as an industry, we stand tall, we stand strong, and I think the AI, there was a little bit of angst with AI, but I think the industry will continue to grow, will continue to take up every opportunity to go deeper, work for our customers, and make sure that we really pay back our shareholders and stakeholders.
Well, I think those shareholders are happy listening to you right now, Venkatraman. Stocks up 6-7 rupees over the course of this conversation. So we wish you, your teams, all the very best as you move forward. But there you go. I mean, you have an industry player basically verifying what some of the analysts have been saying, and that's the point that we've been making, highlighting some of the brokers like CLSA, like Motilal, all of them saying that you have to move past the build-out stage. That's where India wasn't present. We don't have billions of dollars pouring into AI build-outs, the chips and the data centers, etc. But when it comes to using AI to deliver services, that's when the Indian companies will make a big comeback, something that Mr. Venkatraman has also agreed with.